So, Deirdre, one important trend to watch here is big tech companies aren't just big chip customers anymore. They are chip designers now as well. For example, Apple recently launching its new Macs, swapping in its own chip called the M1 and swapping out Intel chips. Then there's Amazon. Now, it already designs a server chip for AWS, its cloud computing division, and recently announced a new chip for machine learning training, too. It's a trend that's been taking place for years, and it's now accelerating, redefining the $420 billion semiconductor market. Analysts say bringing chip design in-house can make sense, lowering costs and improving performance. There are risks, though, too, as AWS CEO Andy Jassy told CNBC.
Building a chip is not for the faint of heart. It's hard to do, and it's really expensive. There are a lot of upfront costs that you may or may not get back. It really depends on how successful you are in building that chip and the performance of it.
One question for investors: how do the traditional chip makers respond to this trend? Bernstein's Stacy Rasgon says they are not sitting idle. They're making investments and bold acquisitions. NVIDIA's Jensen Huang is buying ARM, as we know. AMD's Lisa Su is purchasing Xilinx. Intel's been busy in recent years as well, buying Altera, Mobileye, and Habana. But Rasgon says Intel is the most at risk from this trend, in his opinion, because it is the incumbent, he argues, and its core markets are under attack from NVIDIA, AMD, Apple, and Amazon. Intel stock down nearly 20% this year. It's on track for its worst year since 2008 and now facing new pressure from activist hedge fund Third Point. Back to you all.
Shepard Smith here. Thanks for watching CNBC on YouTube.